So you probably can recall the US balance of payment 2017. We showed you in several times in the class. So we'll be looking at some of the components of this and to make the discussion for today. So our particular discussion of today is with regard to this part. You see a component which is called overall balance. Okay, so we'll be starting discussion from this part. The idea of the overall balance is that we need to look at the overall pattern of the balance of payment. So if we see that the overall balance of payment is in a situation which is sustainable, which is likely to be in a position which will not fall, which will not expose my country to a trouble, in that case we need to be satisfied. However, if the situation is like that, the overall balance of payment is in a position which might make my country or expose my country in a trouble, in that case, we need to be concerned. Now, the question is there any measure for the overall balance of payment? So the idea is that the overall balance of payment, for this measure, there is no single unified measure agreed by all, this kind of measure. Okay, so what we do with regard to the overall balance? So one idea is that you probably can recall this one. Can you recall this? We discussed in the previous class. Anyone? You probably can recall that we mentioned that it is a net foreign investment. Right? So you can recall that we talked about the net foreign investment. It is also used as a proxy or as a measure of the overall balance. So the idea is that we can decompose the net foreign investment. We can decompose or we can break it down, the net foreign investment, into two parts. One is private. Another one is official. Okay. So you probably can recall in that in the financial account, we show the private investment in foreign financial asset. And we also show the foreigners investment in our local asset. Okay, you can recall the FDI, right? So what is this? It is the foreigners investment in our local asset. I mean, foreigners are owning the foreigners are buying the financial liabilities we have issued, and they are making or they are taking the ownership. Okay, so this is a kind of private transfer, right? So similarly, I mean, we receive FDI. We receive FDI, that is credit for us. We also make FDI in other countries, so that is debit for us. So I'm just giving example of this part. So where it is reflected, this part, can you recall where is the address of this financial account, right? Okay. Can you recall we have a third component in the balance of payment other than the current account, financial account, and the statistical discrepancy? Can you recall that part? Can anyone please write for me in the chat box? Can anyone please write? If I want you to remind, what is this? Which part I am looking for? Right. Official international reserve. By understanding of this, as we discussed, can you recall that it represents the investment in reserve assets by monetary government from our country, and also it represents the it also includes the I mean foreign officials investment in reserve asset in our country. So net balance is the official international reserve. Okay. So what I was saying, that overall balance of the balance of payment is often measured based on the breakdown of this idea. I mean, the net foreign investment is broken down into two parts. One is the private, another one is the official. So what is this? We're talking about that these two parts consist of the net foreign investment, and this is also considered as a overall balance. Okay. In addition to this, there is another measure for the overall balance that is often used. That is the idea of the official settlement balance. The term is the official settlement balance. Okay. So let me show you what is this. Official settlement balance is ideally the summation of current account plus the financial account plus financial account. Remember, financial account does not include the official international reserve. It does. Official international reserve is separate. Okay. And we need to adjust for a statistical discrepancy. And this amounts to known as the overall balance. This is equal to what? This is equal to the overall balance. We are denoting it as a simply B. But what is B? B is the overall balance that is produced by summing up the current account balance, financial account balance, and the statistical discrepancy. You see the overall balance here for the US balance of payment. So author, it is probably taken from the US government data. So the overall balance, they have used this definition, which is I mentioned the settlement balance. Okay. Can you use this? Can you use your calculator to make this overall balance calculation by using the equation and taking the number from here? This one, and this one. Can you please add this and write your answer in the chat box? Yeah, minus 187. So it is minus 187, this one. Okay, so you have got it, how it is calculated. Now, let me define it formally, then we'll be discussing on it. Okay, so official settlement balance is a summation of what? The current account balance and the financial account balance. And it also includes the statistical discrepancy. And the official settlement balance is used for what? It is used for what? It is used for the overall balance measure for the balance of payment. Okay, so we have seen two measures. One measure is based on the breakdown of the net foreign investment this way, and another one is based on the summation of current account and the financial account and the statistical discrepancy. So formally we do not mention it, but ideally we need to include this because this is a common item. I mean, the statistical discrepancy is not likely that it often does not appear. The opposite one is true. It often appears. Okay. So you can recall that balance of payment has a debit items and the credit items, and it is solely based on the double entry bookkeeping system. Okay, so ideally the balance of payment, the balance should be zero, because when you sum all the debit items and the credit items, you should get zero. Okay, so we can summarize that overall balance. Can you recall which measure we used for overall balance? This one, overall balance plus, we are defining official international reserve simply by OR. So this B plus this OR should be equal to 0. As long as the balance of payment gives you the 0 finally for double entry bookkeeping system, and this equation should hold. Okay. You already have measured the overall balance, right? Now, what do you see in the official international reserve? Is it just the counterbalance of this one? Yes or no? You measure the official international reserve using, official overall balance using this, and this, and you get minus 187. And what is the counterbalance of this? 187. And that amount should be coming from the official international reserve. And this is coming from the equation, and this should happen. Okay, we are going for explaining it, but have we got the equation? Yes or no? That it should happen. Okay. Yes or no? Are you familiar? I should get at least yes or no from you. Okay, fine. So you can, let me make a discussion on this. Okay, what we try to mean by this. Okay. What do we see for the overall balance of US balance of payment in the year of 2017? What do we see overall balance, positive or negative? I mean the B. We see it is negative, right? So now the question is, what we need to understand when we see that overall balance is negative. Okay. Let me just ask you, when this overall balance is negative, you have more money to invest in foreign asset, or you need to borrow money using foreign asset? I mean, you need to borrow money. I mean, when this balance is negative, when you are in a deficit, do you have the money for investing in foreign asset? or you will have to bring money. Okay, so I get the answer that you are saying we need to borrow. Okay, so how can we make borrow? Foreigners will invest on us. Yes. How can we make borrowing? If foreigners invest in our assets, in that case, can we say that we have made borrowing? Or if we do the opposite, or we invest in their asset, we can say that we have borrowed money. Do you expect when you're suggesting for borrowing, when we will be able to make borrowing? If the foreigners increase their holding of the US asset, or if the US increase the holdings of foreigners asset? Like, okay, so exactly. So we see that this is financed by increase in the foreigners investment in US asset. You see this part, a big part, 185 plus. Okay, so this is one way that how can we make financing. Okay, foreigners need to increase holdings of our asset. Okay, here US means our. Okay, if we look from the US perspective. Similarly, how can we make up this deficit? Should we increase our holdings of foreign asset, or we should decrease our holdings of foreign asset? One route is already clear, that foreigners need to invest in our asset. And what we need to do with regard to foreigners asset, we need to increase the official holdings of foreign assets, or we need to decrease the official holdings of foreign assets? We need to decrease our holdings of foreign assets. So thank you for your prompt responses. So you see that is exactly happening for USA. Okay, as long as they are in a negative balance in terms of the overall balance, we see what the US assets is held by, the foreigners increased, this go up, and this should happen. And the foreign assets which are held by the US, particularly US Fed or US Monetary Authority, that should be decreased. Okay, as long as this balance is negative. As long as this balance is negative. Now, if I ask you if that balance is positive, say 187 positive, what would you say in terms of foreign official holdings of US asset? This is likely to decline. This should decline. And US holdings of the foreigner asset, foreign asset should go up. Right? If we have this positive balance. Okay, so we'll be increasing, we'll be increasing the holdings of foreign assets, and the foreigners will decrease the holdings of the US asset. Okay, so let me summarize what have we understood from this discussion. Okay, so this is the equation that needs to be held. And when we see the overall balance is in surplus, what we need to do, we will go for holding more official reserve asset will be going for this. This will be added. And if there is a foreigners holding of US asset or our asset, in that case, that is expected to decrease. Okay, that is expected to decrease. But the condition we showed using the data, that is this condition, overall balance is deficit. So what is expected to happen? It is expected to happen that our official reserve held in foreign asset will decrease, that is here. And the foreigners holding of our asset or US asset should go up. So that is here, accumulation of the foreigners official reserve holdings of our asset. Okay. Now let me ask you, in which condition Bangladesh is right now facing? Overall balance, surplus or deficit? Any idea? Overall balance, deficit. In that case, what is expected to happen for Bangladesh? Bangladesh official holdings, Bangladesh holdings of official reserve, which is held by Bangladesh, is expected to decline. And the foreigners holding of Bangladesh asset is expected to go up. How it happens? Just think of that IMF is a private lender. Just think of, because you might get confused that what is actual IMF then, or how can we make the accounting of this? Just think of that IMF is the lender and we are the borrower. So when IMF provides loan to us, what happens to our IMF's foreign official reserve holdings with us? Or when the countries like the China or the Japan, they increase the buying of our claim, or they buy our claim, what happens to their holdings of our asset? Their holdings go up. This one. Okay. Is it clear that when IMF provides us loan, and when US or other countries or the JICA or the China or the Russia, they provide loan to us, what happens to their balance of payment? And what happens to our balance of payment? And what happens to the overall balance in our, overall balance in our balance of payment? We should see that we should see this part. If we look at our balance of payment, you should see that the inflows, the foreign official holdings of Bangladesh asset is expected to go up, and our official reserve held in other countries is expected to decline. I will give you the example of this part. This part, how we reduce our holdings of the foreign assets. But let me show you our balance of payment again. You see my screen? I'm in Bangladesh Bank website. You're probably watching my screen. Yes, fine. Okay, we are now in which year? This one is latest. Okay, what you expected to see? Our asset is likely to, our asset means we are our official reserve asset held in other countries or other countries' currency. Okay. And our liabilities is what? Other countries' investment in our currencies, or we are taking the loans from them. Okay. Because we are in a deficit, we should see that our official holdings is expected to decline, and the official holdings of other countries or our partner countries in our their holdings is expected to go up, and we should have more liabilities. We should have less assets. Are you agreeing with me? Then I will show you the data to confirm it. Are you getting the idea? What is expected to see? Yes, no? Okay, let's see. So remember, the second column is the latest one, and this first column is the earlier one. Okay. So this represents the reserve asset. I mean the overall balance. It represents the we see. Okay. What do we see? Asset came down from 9,924 million to $1 to minus 3,711. Okay. And we see what our liabilities went up. Okay. So we have verified that what is going to happen and what is expected to happen more, as long as we are in a issue with the overall balance deficit. Okay. Now the question is, how do we can see that a country is reducing its official international reserve? Is it visible? We are claiming that when a country is in a deficit, we should see what? A country is reducing its official reserve holdings. Okay. Now the question is, can we see this other than the data we have seen? Is there any way that we can get the news of this? Any idea? Yes, no? Have you seen the news that Bangladesh Bank is selling the US dollar in the foreign currency market? Have you seen this? That Bangladesh Bank has sold, increased the selling of the US dollar in the foreign exchange market to increase the supply of the US dollar. Are you getting? Yes or no? You should saw it. You should see it that Bangladesh Bank several times had to sell the foreign exchange. I mean the US dollar, particularly in last couple of months in a bigger portion to manage the foreign exchange market and the price hike of our the USD and the decrease of our depreciation of our local currency. Okay, to check it. Okay, the Bangladesh Bank had to sell the US dollar from its official reserve. Now, when Bangladesh Bank does this, what happens to our official reserve holdings? It goes up or goes down? It goes up or it goes down? It goes down. Okay. Similarly, if Bangladesh Bank just make the opposite operation, buying the foreign currencies from the market or from the banks particularly, and issuing taka, in that case, what happens to the official reserve holdings of us? It goes up or goes down? Official reserve holdings? Yeah, exactly. So it goes up. Okay. So so you should connect this together, say that when the overall balance is in surplus, what does it mean and what is expected to see? And when the overall balance is in deficit, what is expected to see? Okay. Remember this, the overall balance of the balance of payment, is this one. Okay. What do you see by, or what do you mean by it? Okay. This is the definition we use is the current account plus financial account balance plus the statistical discrepancy. So if we see that the overall balance is 0. Can you see this? And can we also see that the statistical discrepancy is 0? Just consider the situation that the financial account balance, which is a positive here in the US, what does it mean? US is getting more foreign funds. Foreigners are investing in US. In that case, you should see that it is a credit for the US balance of payment. Okay, I particularly the financial account. And if US does the opposite, I mean, when US make the loan to the foreigners or other countries, and that will be the minus, or that will be the debit item for the US. Okay, just consider the ideal situation. Okay, say for example, here it is minus 449. And in the financial account, if we see that 449 positive. Okay, just for example, in that case, what you are expected to see? Overall balance. And there is no statistical discrepancy, I mentioned it. Overall balance is to be 0. Okay, so this is a very much idealistic condition, and this should not happen. And what is expected to happen, that often the overall balance can be a positive or overall balance can be a negative. And the definition of the overall balance is like this. Okay, current account plus financial account, current account balance plus financial account balance plus statistical discrepancy. And we have connected this with the Yeah, we have connected this with what? With the official reserve, and this should be equal to 0. Okay. And if I do the rearranging, it should be look like this. Okay. And if you see that the overall balance is deficit, this look like this, you should see what? Official reserve, positive amount. Okay, net balance of the official reserve, positive amount. So when the net balance in the official reserve is expected to be positive amount, when the foreigners increase their holdings of the US asset or our asset more, and we reduce the holdings of the foreign assets more. I mean, we reduce the holdings of the foreign asset and foreigners increase the holdings of the our asset. In that case, we should see what? The positive balance of the official international reserve. So this is all about the part of the overall balance discussion. Okay. Now, you need to verify that what is happening to our balance of payment. Okay, let me check it. Do you see the current account balance from the Bangladesh balance of payment from this part? Can you write it down out of all the numbers? Out of all the numbers, can you write it down in your chat box? What is the current account balance of Bangladesh right now? I mean, the latest figure. So in short, it is about minus $18 billion. Okay, you see this minus $18 billion. And if you look at the financial account balance, we see what? We see what? About 13.7 billion, $13.7 billion. So let us make some simple calculation. Okay. Current account balance, that is the, I mean, we are doing the calculation for overall balance. Okay. So current account balance is minus $18 billion. And the financial account balance is positive. That's why we are adding 13.775. Okay, then what we need to add? Can you remind me? With this, what we need to add to get the overall balance? Statistical discrepancy, exactly. So you see statistical discrepancy, where it is, yeah, errors and omission, this part. So it is, I would say, minus 0.6. Okay. This one is, okay. I need to correct it. Current account balance is minus 18.639 billion. Financial account balance is positive amount 13.775. Then statistical discrepancy is a minus amount, minus 0.697 billion. Okay. So we see that minus 5.561 billion. Okay, that is what? That is the overall balance. Got it? Now, what you expected to see that you should see what? the official reserve asset, you should see the official reserve asset increase by this amount. What should you see if you understand this? I mean, the equation. You should see what? If we have a minus 5.561 billion overall balance, we should see what in the official international reserve? We should see a positive balance of this one, 5.561. Okay, 5.561. So I'm not going for detailed calculation, but let me show you that the amount of the increase in the official reserve is close to this one. You see, okay, 5.32, they are 5.38. So 5.38. Okay, can you recall that it is the overall balance? So there are some, probably there are some rows which we skipped, or there are some addition or adjustment. We have not included that part, but you see that the overall balance is this part, what we used the definition by taking the current account balance, financial account balance, and the statistical discrepancy. Then we see that just the opposite figure in the increase in the official international reserve. Okay, similarly, we should expect it to see that this opposite of this should be the increase in the official international reserve. That is only achievable if we can increase the foreigners holding of our asset, and if we decrease the holdings of foreign asset, I mean it decrease our holdings of foreign asset. Okay, so these are little bit confusing if you are not very I mean concentrated, but you have to think very slowly, and in that case you can get all these meanings. Okay, so that is the part we like to discuss in the part of the overall balance, and we see that what is the implications of the overall balance for the official reserve holdings, and when it is expected to go up and when it is expected to go down. As long as the overall balance is giving us a balance of payment picture, which is likely to be sustainable over time, the country will not expose trouble. In that case, this overall balance seems good. However, if we see that the overall balance is in a position we can't, will not be able to sustain using this overall balance, we need to take the corrective measures. Okay. So in addition to the balance of payment, we like to offer a separate accounting statement. That is the investment position statement, or more precisely, it is known as the international investment position. So it is particularly the statement of international assets and the international liabilities held by and incurred by a country. I mean, I'm using that the held by a country, I mean, international assets is held by a country. At the same time, a country is incurring some foreign liabilities. So in a statement, here you see that what is the international investment. What is the international investment? That is obviously the part of your asset. What is it? And what is the international or foreign liabilities I'm incurring? That is here. So this picture is available from this statement, international investment position. Okay. And from here, you should see that what is the position of a country in terms of the international investment position. Okay. If you see that this balance is positive, Should you conclude that a country is a net creditor or a country is a net debtor? Which option you will pick if the balance is positive? Yes or no? You can connect with our previous lecture. We mentioned about something called net lender and the net borrower. So you should see that the country is a net creditor. Okay. So let me show you a figure of US. I don't know whether I have taken this in my slide, but let me show you from the text so that we can explain it. No. Yeah. You see this figure? It looks like it is the statement I'm referring. Okay. So this figure represents what? The investment position of US, I mean, particularly the international investment position. Okay. In the years from 1897 to 2017. I mean, the story is about more than 100 years. Okay. It is about 130 years, is it? How many years story is here? 130 or 120? 120. I say 120. Yeah, exactly 120. Now, let me discern some interesting pattern from this diagram with regard, from this table with regard to the US international investment position. You see the figure for 1897, 1914, these years. What do we see? US net international investment position is negative. What does it mean? US was net creditor or net debtor during this time? Remember, the credit means that US is investing abroad, and the debit means US is taking investment from foreign countries or foreigners are investing in the US. So US was a net debtor. Okay. Can you recall that when the First World War happened? In which years the First World War was held? Can you recall this GK question? 1914 to 1999, 1919, exactly. Okay, now you see that, is it 1914 or 1913? I got a little bit confused. Is it from 1913 to 1919 or 1914 to 1919? I got a little bit confused. Can anyone confirm? Any other response? It is started in 1914 or 1913? Okay, you confirmed that it started in 1913. Sorry, 1914. Yeah. So exactly, I got confused. It started in 1914 and it continued till 1919. Okay. Now let's look at the figures for 1930. Is it the after First World War? I mean, about 10 years later. We see what US turned to be net creditor or net debtor. US turned to net creditor from the net debtor position. That means the First World War brought good things for the US. That's why US investment in foreign countries increased, and the foreign countries relative to the foreigners' investment in the US, and US was net creditor. And you see that from the 1930 to 1946, the net credit position was doubled about, right? And it increased significantly. You see from 1930 to 1980, in about 50, I mean, if you think from, I don't know what happens to 1920 or 21, but it was more, it took more than 50 years, which during which time, during long years, US reached to net creditor position, and you see exactly big figure, $296 billion, their net credit position. Okay, but we see that just after the 1980, I mean in the 1994, that the US again turned back to net debtor position, and US turned to the net debtor position, or negative net credit position. And you see the latest one for the 2017, the figure is extremely big. And you see that US investment in foreign countries relative to the foreigners' investment in US decreased by $7.8 trillion. Okay, so very dynamic. During some years, it was net debtor, that it was in a net creditor position, then right now it is in a net debtor position. But what you expected for US? You expected that US is now in net creditor position before looking at these figures? Is it true what I'm expecting, that you expected like this, that US is in a net creditor position always? You expected for US what? US is always like that. People believed in class that US is in a country which has the surplus current account balance. But what do we see? We saw that US has deficit current account balance. Now we see that in terms of the investment position, US is now net debtor or net creditor. Yes or no? Are you there? Yeah. So again, I would like to remind you that this net foreign investment, can you recall that what I write? I mean, what I wrote initially in a measure for overall balance. I mean, one of the proxies. You see that direct investment that is coming from where? The financial account. And US official reserve asset, that is a separate part in the balance of payment. And there is a component which is other. Okay. So that is with regard to the investment position. Now, let me tell you something about the Euro crisis, and then we'll be signing off from today's lecture. Okay. So, can anyone tell me that when the Euro currency was offered for the first time in European Union? Can anyone tell me when the euro was offered in the European Union for the first time? When the euro currency was issued for the first time, in which year? Anyone?
1999.
1999. Yeah. It was in the year of 1999. Okay. So all the countries we'll be talking about, all the countries are the European Union countries. Now you see in the year of 1995, and this different lines represent, remember what this line represents. This line represents the current account balance. I hope that you are already comfortable with the current account balance at this moment. Current account balance as a percentage of GDP. So if we see that this percentage number is positive, we should say that the country is in a surplus for current account balance, and the opposite is true for the deficit. Okay. Now you see in the year of 1995, what do we see? That the country, there are four countries. One is Spain, another one is Portugal, another one is Greece. We see that during this time, just think of this point of time, close to 1995, Spain, Portugal, Greece, these countries are very close to, I mean, no deficit, no surplus position, or 0% current account balance as a percentage of GDP. We see no surplus, no deficit condition. I mean, very close to this 0%. Okay. Now, after the 1995, we see that the deficit balance of the current account balance as a percentage of GDP increased significantly. Say, for example, as you mentioned that in 1999, the euro was offered for the first time. And we do see what it is for the Portugal. Portugal had a current account balance deficit of about 12%. And this is for Greece. Greece had a current account balance deficit of how much? About 6%. 6% deficit. And we can say about, you can say for this one is for Spain. We see for Spain, the current account deficit, current account balance deficit is 4%. Okay. And for Ireland, which was enjoying the current account balance surplus for long years, it also entered to the current account deficit horizon in the year after the euro was offered in the European Union, right? So it entered to the territory of the negative current account balance or the deficit current account balance, right? So this context or this situation is known as the euro crisis. And during this time, if you can recall that, I mean, these countries fell into trouble. And what should you see if the countries are in this kind of trouble in terms of their current account balance? If we just assume that the financial account balance is as it is, okay, in that case, their overall balance is expected to come down or expected to go up. If the financial account is as it is, what should you see? The overall balance is expected to come down, or overall balance is expected to reach to the deficit territory. Okay. And if the overall balance reach to the deficit territory, what should you see? The foreigners holding of this country's asset should go up, and this country's official international reserve should go down. Do you agree with me? Yeah. Okay. So the countries which wanted to be the creditor, which wanted to be the lender for these countries, are in a fear that probably these countries will not be able to will not be able to reimburse the claim of the financial assets. So will not be able to repay the financial assets which are purchased by the foreigners. So in that case, if they have the risk for default, obviously you should expect that foreigners will not be wanting to purchase the securities issued by these countries. Okay, so the take away from this figure is that when the current account balance as a percentage of GDP falls to deficit, obviously deficit is a very common, but we need to think of in terms of percentage of GDP. Only the $1 million amount or the $1 billion amount will not tell you many things. Okay, we have to compare. So we are making a time series comparison here that for long period of time, what happens to this balance as a percentage of GDP. So you see that in some particular period of time, all of these European Union countries fall into trouble. Okay, and that was termed as the Euro crisis. Okay. Now, are you interested to see that what is happening to the current account balance as a percentage of GDP? What do you expect for Bangladesh right now? Any expectation? Is it in a trouble condition? Or you feel that we are in a safe condition in terms of the current account balance as a percentage of GDP? Any expectation? Trouble condition. So let me show you some news later. But during this time, what you expected to see, you see the net international investment position as a percentage of GDP. There is another figure. And you see that these countries, Ireland, Spain, Portugal, Greece, as these countries are in a kind of trouble, obviously they are not expected to be net creditor, right? They're expected to be what? They're expected to be net debtor. So you can confirm it from here. So you see that they are in a negative percentage in terms of what? Net international investment position as a percentage of GDP. So these 4 countries, what we saw in their current account balance as a percent of GDP, they are in a trouble. We see that they are in a net debtor position for these long years. Okay, and this is coming down further. I mean, what does it mean? They are taking more loan or they are making more loan? If you understand the international investment position, you should know this. When this is coming down sharply, they're taking more and more loans. Okay, so these are congruent. So let me close the slide. We are done. And I just like to show you. I can't escape my slide. Yeah, done. So I wanted to draw the similar diagram using the Bangladesh Bank economic data. I know that you are familiar with this Excel available from the Bangladesh Bank website, but this data are so messy and disorganized that I couldn't complete this learning. But you should see that if you want to see the current account balance overall, what is happening, you should see out of the contents, you see the balance of payment for Bangladesh is here. Okay, all this data are here. And if you want to see in terms of the, current account balance related to the gross domestic product, the gross domestic product is here, but you'll see that the data is not organized in a congruent way, because there has been a changes in the mechanism in several periods. So you see the breakdown of the table in separate areas or separate years. So that is one problem. So I couldn't complete drawing a figure like the figures I showed you for the US. But let me show you that. Okay, let me tell you a number. That is the current account balance deficit. It is you see that it is now right now about 4% of the GDP of Bangladesh. Okay, so you see a number of news. It is of year 2018, but let me show you some recent one. So current account balance. So this figure is misleading. This figure is misleading because this is not in terms of the GDP. As long as the figures are not reflecting relative to some numbers like GDP, in that case, the absolute figure does not tell you some very intuitive. But if you just look at the current account balance from the year of 13 to the year of 2022, you see the sharp fall. You see the sharp fall. The sharp fall is right now. It is in the it is in $1 billion. So right now our current account balance is close to $20 billion deficit. Now you can confirm it from the Bangladesh Bank side. You see the current account balance. So it is here. So $18 billion. Okay. So you should know these figures, not for the exam, but you should know these figures to justify that you are done with the course, which is international trade and the international finance. Okay. So you see, you can recall that it's about 19 billion or 20 billion, whatever you say, which is easier for you. Then another news that is very newspaper report, that is the high current account deficit may lead to financial crisis. Okay, as you expected that when the current account deficit relative to GDP is unusually high, I mean unusually negative, obviously we should be in a deficit because of our economic structure, but that should not be so negative that will lead to a financial crisis. Okay, so it was warned by a think tank, Policy Research Institute. Okay, so they didn't provide a kind of figure, so like the relative to GDP. That's why I couldn't show the figure what I wanted to show, like this one. I mean the current account balance relative to GDP for Bangladesh. So I think that is all about what I wanted to say with regard to the last lecture for this course. Okay. Now